Good morning, everybody. This is Mark, and we're back here for the T3 morning call. It is Tuesday. So basically, yesterday it really followed through for what we were doing last week, which was a very tight range. We were up in the early morning, sold off early, and not a lot of fanfare across the board in most stocks that we're playing. High beta was a little weak in the AM certainly, and remained most of the day weak. Did recover a little bit. This morning, we're up a little bit. We're up a chunk, probably about 8 to 10 handles. And, you could put that in the fact that it's the China, possibly stimulus that's going on. We'll have to wait and see. Either way, we're still stuck in this range that, quite frankly, is not really a whole lot for us to do. Not that tradable, but it is what it is. Let's look at some charts, and we'll see what happens, and we'll go from there. This morning, Amazon is up. Let's just go to the FANG stocks, which we'd like to talk about pretty much every day, because that's quite frankly where the action has been. Up about $6-7, basically recovering from its to its 8-day moving average. The last 3 days, basically every gap up has been sold. We'll have to see if that remains to be the case. Either way, I still think 700's in the cards year end, but how it gets there is another story. So certainly keep it on the radar. Google up a little bit also. You can see chart-wise, looks okay. And it's hanging, and it's probably $2 or $3 again, regaining its 8-day moving average. We'll see if it's high beta's day. Again, a gap up in the morning, not necessarily meaning a whole lot. Facebook, that's hanging. It is a little below. It did close a little below its 21-day, which I don't love to see, but today, right now I think it's up right at its 200-day, or maybe 105 is right at its 21-day. So we'll have to wait and see if that regains some composure for it to be a tradable idea. Either way, I am long. I did buy some. I tend to buy it on the pullback. That's what I like to do. Not with a whole lot of size, but I do have conviction that the idea is going to work at some point in time. So that's on my radar. And then we do Tesla, which actually hit some resistance yesterday. I would expect a little bit more digestion, basing, maybe even downward action before the stock actually breaks to that resistance around 232, 233, which it failed at yesterday. LinkedIn up a little bit this morning, actually hit its 21-day and held. So it's caught between its 21-day and its 8-day. Overall, it looks good to me. Hasn't really been giving you a whole lot of trades intraday, so just respect that a lot of it's just overnight and positioning yourself accordingly. It seems like 240-ish is the level we have to get involved. 237 was was that level after the earnings that it came back down to. So that should hold. But overall, it looks fine. Just not a lot of fanfare for us to really take advantage of across the board in that idea. Priceline tried a little bit yesterday, still not really getting there, but it's holding its 200 days, so it's something that needs to be on the radar. Expedia, same basically category, not really a whole lot to talk about. Could be breaking a descending channel, maybe above 125-ish, so it's certainly on my radar accordingly. Stock-wise, you had oil stocks that were strong yesterday, but my comment with the oil, I don't think there's a whole lot for us to look at from a day-to-day point of view. BABA, we talked about yesterday at the close, adding to the MSCI index, had a nice move. I would expect digestion at this point in time, but I wouldn't be surprised to see a move back up to the 86.50. I was talking about at 79 where I was getting involved and had some conviction. It's played itself out. I did lighten up on certainly options on most stock, but overall it does look very healthy. Obviously the volume was incredible yesterday, but that was a one-time event across the board, and you can go do the same with BIDU. One-time event. BIDU is actually down, huge volume, but again it's getting added to that index. So the mutual funds, they needed to get involved, and I'm assuming they were getting involved over the last few days regardless. Accordingly, the IWM actually remains the strongest indice over the last few days. Did hit a little resistance yesterday, and you can see that red bar. We'll see if that puts a temporary stop to it. I would expect if it gets a downdraft, maybe 118-ish for us to get back involved, 117.50-ish. across the board. But when the IWM, the Russell, goes up, you have the GMCRs moving up. You have some of these other, randoms moving up that, quite frankly, aren't on our radar every day. Hence why you have to just search it out, do your work, and ideally find some opportunities accordingly. IBB, up a little bit this morning, but it got rejected yesterday from that level where it was looking to break out. So in my opinion, it needs more time. That's sort of what it means. That's normally what it means. Had its chance. Doesn't mean it's necessarily a screaming short, but it does need more time, and that's where I think we're at with the IBBs. And then you could just go across the path. REGN actually failed a little bit, but it's at some support right around here, maybe a little lower. CELG doesn't look great to me. It really has not shown a lot of composure, but 105 is some support, and it could make a higher low. So 107-ish might be an opportunity, but does not look great. Gilead failed again. That's sort of why the IBB, they basically worked their way up to where they were looking to break out, and they obviously just had some selling pressure come in. Most of them need more time. Nothing so compelling on the bios. It's all on an individual basis across the board. So overall, guys, I can mention the banks, but there's really not a lot to mention in that. You don't want to really make stuff look pretty or try to make a trade happen when it's not really there. And I don't think there's a trade there in the banks at this point in time. So I'm not really going to talk about it. You can obviously do your work, do your chart work, and tell me I'm wrong. But overall, there's really nothing compelling on most of the bank stocks that I'm looking at, going from Goldman to JP Morgan, even AIG, which might look the best. Nothing that compelling. So overall, guys, I'm sort of in that camp where we're not getting a whole lot of action midday. It seems like we get a little bit of a gap up, and a lot of times there's selling pressure that happens. And usually after the European close, it becomes a little bit more clear what really is happening, and you get some intraday movements for us. The first half an hour is very tough, and if that's where you're hoping and banking to make your money, I think you're really it's not this tape. That's my opinion, but overall, obviously things change accordingly. As the markets change. We're getting into the last month of the year. This is new money getting put to work. I would expect the winners continue to win, continue to move up, but obviously you got to be strategic on where you're buying. And I would suspect the stuff that really has been poor all year, people want them off their books, tax loss selling, and then obviously looking for the new year, they might look to get back involved. That's where I'm at today. Certainly stay tuned to the radio. I will keep you up to date with any information that I have. Have a good morning.